Welcome back to another Tech Talk from MarketEdge.com, your source for unbiased technical stock analysis on over 5,000 stocks and ETFs. My name's Rachel, and with me today is David Blake, CMT, here to discuss last week's market and what we should look for as we continue into this week. David, how are you doing today?
I'm doing well, thank you.
Fabulous. Let's jump right in.
Well, last week we had a volatile week that left the major averages with small gains. That we had investors navigating swings into low prices, Federal Reserve's decision to leave rates unchanged. And then we had new buying in the AI chip trade last week off of earnings from Microsoft and Amazon as the week ended. But anyway, President Trump had called off bombing in Iran, and we started out with a nice rally to start the week. And then in the afternoon, we saw a sell-off in the chips again. This market kind of swings higher and lower the way that these overweighted big cap tech and chip stocks going. So we ended up with a mixed market off that sell-off with the tech stocks on Monday afternoon. And then we came in on Tuesday and we saw a big swing again. We had the Philadelphia Semiconductor Index fall into a bear market. And then we had the NASDAQ diverged from the Dow Jones. We talk about negative and positive divergence all the time. We had the Dow Jones spiking higher, and then we had the NASDAQ recovered from an early 350-point sell-off. It still finished down, but we did have the dip buyers coming back in. That same session, we saw the Dow up 537 points, over 1%. So a real divergence between the different indexes as we continue to have that rotation out of the tech stocks and into the cyclical areas of the market. That was a perfect example where you had the Dow up 500 and the NASDAQ down 350 on the same day for a while there. Okay, then we came in on Wednesday. We had another big sell-off, and that was because we had the U.S. and Iran re-escalating the fighting again. And we had a pretty nice drop in the market, but then in the afternoon, we had the Fed's decision to leave rates unchanged. But in the press conference, Fed Chair Warsh talked about, we've got to keep on top of this inflation. It's going up. It's higher than we want. All this stuff and about reasons why we should raise rates. Then they didn't raise rates. That had Wall Street a little bit confused, and they were a little bit not real happy with that. So we had a second leg go down in the afternoon, and we actually had the Dow down 1,100 points, over 2% at the finish. The NASDAQ was down 1.75%. We had the NASDAQ 100, which of course has all the big overweight tech stocks into it. It slid into a correction territory, so it was down more than 10% off of its highs. And so we're watching this. How far is this going to get? Are we going to keep on selling? Then we started having earnings coming out, which have been great so far. I mean, to tell you the truth, when you look at earnings as of Friday, 60% of the S&P 500 index have already reported results. And we've had nearly 90% beat earnings per share estimates, and about 3/4 have surpassed revenue expectations. That's a stellar earnings season. And in fact, as the market is higher here, as the earnings come in, you're actually seeing the multiples on the different indexes go down, which you don't see that very often at all. So we're in pretty good shape here with the market going forward. So anyway, Microsoft, Lam Research, a couple others came out on Thursday. Microsoft blew the numbers away. Their cloud business went way through the roof. Lam Research, we're saying they're having a hard time keeping up with the AI chip demand. And so we had a surge right at the beginning. We had the SOX semiconductors bounce back. It was up 8%, with the NASDAQ up 3.36%. And we actually would have been higher than that, except Meta came out and Meta Platform, and they kind of disappointed with some of their CapEx spending. It was down about 8%. Again, that's an overweighted stock that God knows what we'd have been up with without that. So then we come in on Friday and Amazon releases their numbers, or at the close on Thursday, I guess. And of course, they crushed earnings again. Kind of outweighing a little bit of that was Apple. They disappointed, and it was down 9%, or again, you might have had new highs in the market last week. So it was a good way to end the month and the week higher. We also saw yields. They were kind of mixed, and the longer end has been ticking higher while the shorter end was going down. The 2-year was at 4.27 on Friday, with a 10-year increase to 4.71. That's the highest since January of 2025. But one of the problems with this, it pushed the 30-year Treasury up to 5.26%. And the 30-year mortgage on Friday was at 675. And today it's at 682, which is causing, buyers to kind of step back a little bit. And it's also stopping the refinancing business a little bit. I saw that was down 10% last week. So that's something to watch. It also makes housing stocks struggle with the increase in mortgage rates. Home construction ETF, ITB, it was down about 6.5% from Tuesday's high to go into Friday's close. So that's going to have a little bit of a hard time. Today, however, you have a little bit of a bump in the housing stocks because one of the Fed presidents came out and said that he sees inflation not going to be a problem, and he thinks rates will probably be coming down, but they're ready to act if it doesn't. So that's causing the rates to tick a little bit lower. So anyway, today we come in and Trump comes out and says that he called off the attacks on Iran. And of course, that we saw a big drop in oil prices. I think they were, last I looked, they were down 79. That's from 85 or 86 last week. And of course, we have a great rally today. I think the Dow Jones is up about 650, and you have the NASDAQ up about 550. Now, the interesting thing here is we had the Dow Jones making a new high as I'm talking right now. Last week on Tuesday, we had the equal weight S&P 500 make a new high. That's the ETF for that is RSP, and that's making another new high today. That kind of pretty much confirms the rotation that we're seeing out of tech into more cyclical areas, as you see the banks and industrials, that type of thing outperforming. And then you also, another confirmation that we're moving higher. We have the NYSE AD line making a new high again today. That's considered a leading indicator for market direction. Normally, because that means more stocks are under accumulation. And so going forward, that means the broader market is under accumulation. So that's something that we want to see. I did want to mention last week, we had the CTI was scheduled to possibly reset to a positive reading. It was going to be a positive 9, I believe. However, with the sell-off that we saw last week, there's a rule of commonality in psychoanalysis that if the majority of the indexes make a new low from the prior week, then the cycle hasn't bottomed yet. With today's action, it means that we probably did have a low for these cycles on Wednesday, which would mean that A, B, C, and D, 4 of the 5 cycles, will probably reset on this coming Friday. But what you want to kind of take a look at is if you see the Dow Jones trade below 50,579, I think we'll break that, then the cycles would be extended for at least for another week. So we're at a turning point for the market, but you have your disciplines that you need to follow. And that's what we're following today. I know I often talk about the FLDs, the 4 lines of demarcation. And we are getting confirmation from that today that last Wednesday was probably the bottom for these cycles. But we don't change midweek. We always wait until Friday's close before we change these things. I would be buying the dips in here unless you see the bombs flying through the air again. Now, what we also had last week that made us kind of pause before we would switch to a bullish market posture is we had several of the indexes. We had the NASDAQ 100. They had both fallen below the 100-day moving average. Then they kind of bounced back up and cleared that. Today, I think the NASDAQ actually, today, even with today's rally, it has stalled just below its 50-day moving average. So you do want to kind of watch that. So they're being a little bit cautious today. They don't want to get too exuberant with that. That's something we want to watch also. Besides that low in the Dow, you can also watch to make sure that some of these clear moving averages are also taken out. I don't think the semiconductor index has made it over the 50 either. It's back above the 100, but not above the 50. So again, a couple of cautionary things going on with some of the indexes that we may want to watch before we just jump all in. But I think right now I would be looking to buy dips. And it seems to me that whenever it's time to buy the dips, investors are just jumping back into the big mega caps again, because you have Amazon, Microsoft, even Meta. All these stocks are up, 4 and 5% today. So the money's flowing back into those numbers. Okay, we have seen the expansion also in the new lows, especially on the NASDAQ. NYSE, the new highs and new lows, they haven't really changed much. We did see some contraction in the new highs last week as the week was ending, which was a little bit concerning, but not that much of a thing because they were still outperforming the new lows. But on the NASDAQ, we really saw some expansion in the new lows. You had up as many as 289, 352, 230 on different days last week. And that's up from just 2 weeks ago when it was 100 and 150 and 230. So that was concerning to me that had we not gotten this big jump today from oil falling back and from Trump calling off these bombings, you probably would not have had this spike in prices like what we've gotten today. Okay, next we have talk a little bit about investor sentiment. And we have seen kind of a pullback in that, especially on the retail. The retail is back down here below the historical average. They were coming in here at around 31%. Retail investors are bullish, 42% are bearish. Normally, historically, you have about 37.5% of retail investors bullish. So we've been below the historical average for the last 5 weeks. We'll see how they go this week. And then you also have seen some of the investment managers kind of reducing their holding over the last couple of weeks. 3 weeks ago, we were at around 96% equity exposure with the hedge funds. And we dropped down to 84 2 weeks ago. And then last week, they dropped down to 79.7%. So they've been taking a little bit off the table. That could just be lightening up on some things going into the last week of the month, because we have a lot of window dressing. And possibly today, you might have a little bit of window dressing going on today, just as they rotate into some other stocks. If they kind of drop, as the statements go out, some of the managers may not have wanted to show that they had Meta or some of these ones that have gotten beat up in their portfolios, and then they'll buy them today. So it'll show that they actually do own them, and it helps their performance coming out. But they want you to look at the statements and go, oh, these guys really know what they're doing. They weren't in those stocks. They probably were. That's where they sold them. That was also a reason why on Thursday and Friday you saw such a strong rally, is going into that FOMC meeting. A lot of Wall Street firms were banking on possibly a rate hike, or if they didn't, at least have a Fed chair Warsh come out about more hawkish, saying, we could have raised it. And that caused a lot of short covering to go on, which again, when that happens, they just got to keep on buying. And that's why you may have had these big spikes in the market last week. So, all right, so let's talk a little bit about this week. Again, it's so hard when these swings like this, 1.5%, 2% swings in indexes, when you have just the president saying, okay, we're not do this. Okay, tomorrow he comes out and says, okay, we're going to bomb them tonight. Then you have oil spike up, and you just don't know. But we're going to kind of skip on that. We're going to talk about some of the economic data that came out today. We had the ISM manufacturing index beat expectations, and it actually hit a 4-year high today. It was at 56.7 or something like that. And then we have some more manufacturing data coming out later on in the week. We have the Bureau of Labor Statistics coming out on Friday. Right now, they're looking for 83,000 new non-farm payrolls to be released. That's after 57,000 gain in June. And we'll get some more talk probably from Warsh after that. And they think the unemployment rate will stay unchanged at 4.2%. Tonight, we have another big wave of earnings. We have Palantir Technologies. Tomorrow, we're going to have Advanced Micro Devices, Caterpillar, McDonald's, Merck. We'll have SpaceX's first earnings report coming out. That ought to be interesting to see how investors react to that. That'll be on Tuesday. And then on Wednesday, we have Eli Lilly, SanDisk, Uber, Walt Disney, Airbnb coming out, Constellation Energy, ConocoPhillips, a few more. So it's going to be a volatile week. How much follow through we'll get from today's reaction to the ceasefire thing going back into effect or whatever. Again, it is very hard to project what's going on. But if you step away from that and just look at the technicals in the market, which is what we try to do for you with MarketEdge, I think that you can buy the dips in here. Remember, there is kind of a cyclical bias right now, as you have the Dow Jones and the equal weight S&P 500 at new highs. But then again, you have the NASDAQ and NASDAQ 100 stuff starting to play catch-up ball. And the overweightedness of those big cap tech stocks and Mag 7, they can catch up pretty fast. Going forward here, I expect the CPI to flip to a bullish call on Monday. And I think maybe we have a little bit of an end of the summer rally going into the fall if we hold that 51,000 or 50,579 in the Dow this week.
Very good. Thank you so much, David. Is there anything else you'd like to share with our viewers today?
I don't think so. It's going to be a wild week, I think. And hopefully now we can put some of this stuff behind us. And as the earnings come out, we're going to watch the market maybe start to take a new leg higher.
All right, that's it for this week. Thanks so much for watching. If you have questions for David or anyone on the MarketEdge team, please feel free to email us at support@marketedge.com or drop a comment below if you're watching on YouTube. We'll catch you next week.